European banks ace US Fed's strain test, display sturdy capital tiers. Washington, London. The US devices of essential European creditors including Deutsche Bank, ETR, DBKGN, Barclays, LON, BARC, and Credit Suisse sailed through the Federal Reserve's annual strain tests on Thursday, displaying they maintain sufficient capital to climate and financial surprise. For the 7 European financial institution subsidiaries the Fed oversees with greater than $100 billion in belongings, the average capital ratio, a degree of the cushion a bank has to withstand capacity losses, remained well above the regulatory minimum of 4.5%. It was also better than the average ratio for the broader organization of 34 banks examined, consistent with the evaluation of the consequences. The average capital ratio for the 7 European creditors stood at 15.2%, in comparison with 9.7% for the 34 banks. Deutsche Bank's U.S. operations had the best ratio of all banks at 22.8%, even as Credit Suisse became the third highest of the organization with a ratio of 20.1%. HSBC was the straggler of the overseas page circa with a ratio of 7.7%. Under its annual stress, take a look at exercise hooked up following the 20,072,009 monetary disaster. The Fed assesses how banks' stability sheets could fare in opposition to a hypothetical extreme financial downturn. The results dictate how a great deal capital banks need to be nutritious and what sort of they can return to shareholders. This year's critically adverse state of affairs noticed the financial system contract 3.5%, driven in element by a hunch in commercial actual property asset values, and the jobless rate jumping to 10%. The other 4 European subsidiaries examined had been UBS America Holdings, Santander, BME, SAN, Holdings USA, and BNP Paribas, OTC, BNPQY, USA. While the situations have been devised before Russia's invasion of Ukraine and a pointy leap in inflation, the exams need to reassure policymakers that Europe's top creditors are resilient sufficient to face up to a likely recession this 12 months or in early 2023. The Bank of England mentioned this month it became glad creditors had been no longer too massive to fail, although it did name for greater readability on how a lot liquidity 3 important banks including HSBC might require in the event that they needed to be wound down in a future crisis. The European Banking Authority is scheduled to run its next EU-wide pressure take a look at in 2023. However, buyers are on high alert for proof of a fall in assets satisfactory at European banks, as borrowing quotes start out to upward push from ancient lows. In 2020 the Fed modified how the test works, scrapping its pass-fail model and introducing a extra nuanced capital regime. See an explainer at the pressure assessments here.